Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 20th of October of 2022. So basically, the overnight Nasdaq, we are holding 11,000. That's good. The close, we are right now trading in that level, the close in the settlement price of yesterday's, and we just broke pre-market high, barely, by a little bit of points. Let me grab this. And that's good. We are testing 11,000 and almost 200. We are coiling in this upper resistance that we took from yesterday's close. We tested that in overnight and we are right now holding it, hopefully pushing 1,200. And if you notice, this descending trend line just broke up with quite a lot of volume with, pre-market is having green candles. Regarding RSI, we are quite overbought, so it's good that we are consolidating. We are trading sideways in this area, consolidating this support and perhaps coiling for a move up. And that's good news. Yesterday, Tesla reported earnings. So if we can see here, Tesla beat reported earnings per share better than expected, but missed revenue. So in Wall Street, when you miss revenue and you're a growth stock like Tesla, you probably are going down. Wall Street is very demanding, so Tesla was required to beat in both earnings and revenue, and they missed revenue, so they gap down. Right now is consolidating just above this daily level 206. So let's check the daily. We are holding these June lows. That is quite important. We were up, but right now we are gapping down from yesterday's earnings. So hopefully the first level that we have to beat is this flat top in 212. And that's for Tesla and for the Nasdaq. Rest of the earnings, AT&T, they are reporting earnings also today. They are not reported yet, but they are already up 3%. And the rest, Snapchat is one of the big ones that are also reporting earnings. They are after market close. So we will keep an eye on Snapchat. American Airlines, it's also reporting earnings before market open. So, and they are right now almost 3%. So right now earnings are quite good. Tesla was the first one missing on revenue, and that affected the Nasdaq quite a bit in the late afternoon. But right now we are actually pushing. So let's change. We are pushing pre-market high. We are breaking it. And let's see, because I think we can take a look to what economic data it's coming in 7 minutes. So we have initial jobless claims and Fed manufacturing index for Philadelphia. So this initial jobless claims is quite important. They are expecting a little bit more, slightly more jobless claims. The worse, the better. This is what we expect for the market to go up. If we miss the consensus and there are less people jobless, that means that the labor market is stronger, and that's bad for future and upcoming interest rate hikes. What else? Well, that's 8:30, and at 10 we have again home sales, existing home sales in this case. We are expecting a little bit decrease in the existing home sales. That will mean that people is not buying homes and demand is decreasing. Remember, Feds are expecting demand destruction for both existing home sales, for both consumer in every aspect of the retail world. and also more people feeling the pain in the jobs. More jobless claims, more people with more unemployment. So that's the deal in here. We need bad news in all these data to go higher, because that will mean that Fed maybe will be relaxing their rate hikes. Right now, if we check the expectations on the FOMC in 13 days, we are still almost 100% for a 75 basic points. So that's the thing. Let's go back to the charts and let's review another important aspect of the last couple of days and more today: yields. Yields 10-year, it's pulling back quite a lot, and that's bullish. We peaked 4.2%. Let's change that for 30 minutes. So we have a big area here. We have a big area here. I think this is coming from way back. Oh no, okay. This is coming from here. So let's adjust this, because this was the final breakout. I think we are going to see almost also here some kind of, there's a lot of pressure in this level in 4. And also I think we can also expect some kind of, maybe not level, but for sure this spike will lead to some kind of support around 4.1. So as you can see, 10-year is pulling back. That's good. And 2-year is kind of holding. 2-year has a daily level, a big daily level in 4, in this pullback, also in this 440, and we reach 4.6. This 2-year increasing more than the 10-year means that the inverted yield curve is going lower, and that's bad for the market. We need that to start to push back against 0, because that would mean that recession fears are decreasing. This is basically the inverted yield curve is the recession index. It's not an index, but you can feel that if this goes lower, fear is increasing. It's the same as VIX. It's inverted as the sentiment. VIX is in the middle of nowhere, still 30. So the worse VIX, the lower VIX goes, the better for the market. The lower, and this is inverted also, the lower the yield curve goes, that's bad for the market. That means that 2-year is way higher than the 10-year, and that means an inversion in the yield. For the rest, I would like to highlight this crazy April 2023 yield. Almost it peaked high of 5.005. So we reached 5% next year April yield, and also September is peaking 4.925. So that means we are going to be 6 months with 5% yields, and that will be painful for everyone. People have no idea this is coming, and we are pricing in also in December maybe a rate cut to finish the year 4.72. That's what is coming next year. So be prepared for that, because this is what's causing the market to be as choppy and as bearish, because yields are not improving. We are still expecting in 13 years a new rate hike from the Feds. And I think that's what's causing the market to not be bullish enough to push for new levels. HYG, high yield corporate bonds, still pulling back. This is super choppy. Basically, we can just summary is that we are still chopping in here. We'd like to see these yields, high yields, to go up for market to start risking assets in these bonds. That would mean bullish sentiment. Same for TLT, Treasury bonds, 20-year Treasury bonds. You can see what we are going lower and lower and lower and lower, and then that's bad for the market. Treasury bonds are quite important for the overall sentiment. So high yields, meaning bad for the market, and these high corporate bonds going lower, this is not good. Let's check the dollar. Dollar is still, well, it's quite weak right now. Let's change to the 30. We were expecting this kind of move low through 112.50, and we are actually going quite lower. So let's see what happens. Yeah, rejecting this pivot. So we are on the line with this projection. We will see. We will see. It's time. Let's check economic data. So economic data, jobless claims way lower than expected. This is very good for the market. Philadelphia Fed Manufacturing Index still in the lower. Nice. Claims 4-week average higher than expected. More jobless claims. Continuing jobless claims a little bit higher. So that's good. Oh, wait. Jobless claims are less than expected. So initial jobless claims, the people that initially is the first time that they are claiming jobless, are lower. But continuing jobless claims are, we were expecting 1,375,000 and we got 10,000 more. So this is kind of good, but initial jobless claims coming lower. That means that less people are initially claiming, but not a lot, but more people are continuing jobless. So that's the reading. Employment for the Philly Fed employment, it's higher. That's bad. And prices paid, this is pricing in inflation. So this is what 830 brought us. Let's go back to the dollar index because it's quite nice to see what dollar is doing. So we are basically pulling back, and that's good for the market. Let's see how it's reacting. It's reacting more or less good, but I think apart from the dollar, we are pricing in this equilibrium, this uncertainty of the jobless, the labor market. So we will need to have patience and discipline to wait for our opportunities. Let's continue reviewing. We got the dollar. Something worth mentioning, let's go back to the Japanese yen. Hit 150 against the US dollar. Weakest level since almost 32 years. So basically this means that Japan Central Bank is waiting for an intervention in their markets, in their forex market. The same that we got with the Bank of England, with the sterling. We are now waiting for that in the pair with the yen. And this is quite bad news for the overall world. So let's check USD JPY. So we are, as you can see, we are basically ultra bullish. Go to this is weekly chart. We are since March, we are spiking until 150, and this is the spot where Central Bank of Japan is waiting for an intervention. They are waiting to see to put a price cap in here, and if not, they will hold the market. So what happens when a central bank holds a market? So that pushes a little bit the status with the dollar, and maybe it will help the economy of that country. However, if they try to hold, but they say, okay, no, this is not a good idea, we will just release the market and let it go. This could just spike and the overall market can crash even more. So the same thing that happened with the UK 100 can happen in Japan. Japan is trying to not increase the rates. They are right now pricing 0.25 interest rates. Right now we have in US, we have 3%. So they are crazy lower. And not hiking interest rates means that your money, your pair index versus the dollar is going to be affected, and this is what causing the price spike. So be careful with that. First, Bank of England, now Bank of Japan. Be careful. Let's focus on the dollar. It's quite correlated with the market. We need dollar to chill, to go down, to bring all other countries to pair, and maybe recoup some kind of strength in the overall macroeconomic. And energy. Let's go to energy. Crude oil. Look at this. Sending resistance break. We were consolidating this overnight and we just broke up. This is bad news for energy. I mean, not for crude oil, but for us. It will bring us some inflation if this is still going. So crude oil is right now trading at $86 per barrel. We have 88, 89, a quite heavy resistance here. So let's see, we just broke up and let's see what happens in this kind of breakout pattern. So we don't know if we will reach it or not. Natural gas still going lower. We are approaching to the demand level of 550, 560. I expect some kind of pullback, consolidation. And from here, we'll see in the winter from Europe, natural gas is quite important. Utilities. Utilities, we mentioned in the past that utilities, you can see it's quite nice. We have this market structure. It was pullback, but it rapidly went up again. We are still coiling, trading sideways. Utilities we need this to go up. Sector fund utilities is super important, same as consumer discretionary. We have this pair XLY versus XLP, consumer discretionary versus staples. We need investors and traders to put money on discretionary, to trust again retail, to put the money flow into XLY. Right now, we are going lower, so that's a divergence that we have in the market. We need to hold this or to regain 2.11 to put some kind of pressure up, to push up the market. So let's come back to Nasdaq to see, okay, so we are reacting in a bad way as I was expecting. Jobless claims, initial jobless claims were lower than expected. So we will see. What else? I think I'm going to end with financials. Financials still holding in the daily. We are more or less establishing here. We have the EMA, we have the 200. Maybe we can push. Financials are quite good. This week is the continuing with the earnings, but we have Tesla yesterday, and we will continue to report this week with Snapchat, American Airlines, and AT&T today. So I think that's all. We reviewed yields. High yields are in the green. Dollar is pulling back, but we'll have to see. Be careful with Japan. If you are trading Forex, be careful trading the pair with the US dollar and yen. Energy, crude oil is still pushing up. But right now for Nasdaq, we have these two levels. We had this, we broke in pre-market. So we can remove this resistance. This is no longer applicable. We have this level. Let's go to the 30. We have this level. It's super choppy. This is not quite clear if it's this or this, but for sure we need to hold 11,000. 11,000 is quite important. Bulls need to commit down here. because if the breakdown appears, we can see quite rapidly 10,700, and if not, for the bull case, we need to hold settlement and prior close, we need to hold yesterday's close, or maybe a move higher. Again, last week, this blue dot line is quite interesting. We are rejecting this high pricing, and for the ES is more or less the same. 3,800 is these are two big levels for the S&Ps, and the Nasdaq is weaker. As you can see, the pivot is lower. So we'll have to see. The economic data today is not good, so maybe expect some kind of bearish sentiment, and be careful with 11,000. I think that's the key spot we need to hold if you are bullish. We can see the structure. W, be careful with this. With descending, we broke up, but economic data was released and it was worse than expected. So that could change the direction, and we can see, be careful with this spot. So let's mark the spot. I think around here is quite important. We need to hold this area. So as always, thank you for your time. If you have any questions, you can comment down below and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts like this one, very important one, the first one of the day, to start the morning, to start the information flow and to be prepared. Next, market updates at noon and market recaps once the market closes. So I appreciate your time and see you in a couple of hours with the market update. Remember, discipline and risk management are key for success. Be patient. If you know your levels, plan your trade and trade your plan. Stay safe, everyone.